Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Hello, my name is Aaron Edwards with Santos Springs. It is September 30th. We're right at the flipping of the calendar from September to October, and from the next crop year is beginning. This is where we'll mark the beginning of the next crop year. The title of this video, and it's not even really a market title, it's just keep up the good work. There's been a lot in major media outlets and online just kind of blaming farmers for the tough situation. And I just wanted to encourage you, just maybe turn off the news, maybe turn off the social media, just get the work done, stay in the field. The world needs U.S. farmers, and keep up the good work. On a national level, we are approaching 20%. I think yesterday's number was 18% of the corn has been harvested. Historic average is 19 for the week. And 19% of the beans have been harvested. Historic average is 20%. So about a fifth of the way done. Keep up the good work. We'll talk about the markets in just a minute, but I just wanted you to know that I really value what you do, and I know that a lot of people, I'd say anybody with any little bit of common sense is very grateful for U.S. farmers. The world is a better place because of what you do. Keep up the good work. We're here to help however we can. Can't change prices, can't change the world. All of us wish we could. We'll jump into the nitty gritty. I just wanted to make sure that we stand with you, thinking of you. You're in our thoughts and prayers. Be safe during harvest. Hopefully you can bring in a big crop, and who knows, knock on wood, maybe we'll get good prices down the road, and that'll help a tremendous amount. So that said, let's jump in to the recommendations, and then actually have some talking points, a little bit to go over. So first thing is no action recommended. I will say in parentheses, watch the question at the end. A couple weeks ago, we talked about if you have overrun bushels, what are your options? And then I even mentioned optional long positions on corn, depending on what you were doing. So I would say no action recommended, but even if you're a little bit pressed for time, just leave this video or email me or whatever. But there might be some tweaks, or there might be some decisions that you should make on a case-by-case basis. I'm not going to recommend an action because I guess the official recommendation is that whatever we needed is on basis contracts, and I'm not ready to lock in the futures on that. So that's why there's no official recommendation, so to speak. And I'm not excited to start selling. Our focus now is Q4 bushels, right? We're just focused on whatever old crop you had. If it's not handled, it's new crop now. We're just focused on Q4 bushels. Now we got we've got 3 months to price this. That's where my official recommendation, thought process is. So No, I'm not excited about selling it. That being said, as combines run and as you have that switching from old crop to new crop, there may be some situations, and that's exactly the question that I got from multiple of you in one way or another, but I'll answer it at the end. So stay tuned in. If you have doubts, watch that question at the end. But I just wanted to talk a little bit, just some talking points, almost housekeeping. And I know you're busy in the field, but we'll go over it. So first point I just marked, we're switching from old crop to new crop. So it's kind of blank slate on to the next crop year. And now we're focused on the 25-26 marketing cycle. And that's what we have. So we've got Q4 of 2025, and then we've got the first 9 months of 2026. That's basically our focus on grain marketing. And yeah, we'll be doing some forward pricing for next year's crop if we get some opportunities, but that's not today news. The other thing is the Argentina update. This is almost comical. So if you remember last week, I mentioned that basically they have a 26% tax on soybean exports, and they temporarily said, no, you don't need to, they temporarily lifted that tax, but it was conditional on two things. Through the end of October, because they have a big election coming up. So it was literally just, we need to bring in some dollars before this election to hopefully tip the scales in favor of, the election, however the government wanted it to go. Through the end of October, or $7 billion worth of exports. They got $7 billion worth of orders and exports, and I believe it was 3 days. So basically, it was just insane. First half of last week, and then they're like, oh my goodness, they just exported $7 billion. Obviously, they didn't physically export that, but they wrote the commitments on just an insane amount, and a lot of that was soybeans. Of the soybeans, came out to about 19 million metric tons of soybeans. 6 million of that would be new crop for them, which is like March-May contracts, the March or May contracts. The bulk of that, almost 13 million metric tons, was available soybeans. So just real big picture on this, Argentina typically exports about 4 million metric tons of soybeans, and they produce a lot of meal, and oil. But they crush an awful lot of soybeans. So they export 4 million metric tons, and then they crush the rest. And depending on how you crunch the numbers, they just wrote commitments last week to export almost, it was like 12.5 million metric tons. So what, 300% of their usual exports. So they usually export 4. They exported almost 13 of just available soybeans. That's just, old crop, so to speak. So there is a case to be made that there will actually be a soybean deficit in Argentina, given their yields. We don't know their yields and whatnot, but Argentina may very likely actually be looking to import soybeans, maybe from Paraguay. That would be the most natural importer, because they also made commitments on meal. So basically, Argentina sold a ton of, much more than a ton. They sold a lot of soybeans, and so they'll probably actually have to import more soybeans because they also sold a lot of meal. So Argentina kind of filled that ticket, got a lot of sales made to China, undercut the U.S. market, and did it in like 3 days. I still think there might be a little bit of a long tail to that story, but I wanted to just kind of bring that update. And will it happen again? It could, but the big incentive was political, and they have this election in October. And they already exported a lot of soybeans. So it's kind of one of those things. I want to hold my breath that it will happen again, but it could happen again for sure. And the big questions there is, did the U.S. lose demand, or will that demand resurface in December, January? And I think that's still something that we don't know yet, but I think pretty much for sure our harvest demand that we were hoping to fill some contracts with China, man, Argentina really came in hard and undercut that with their super aggressive exports. which brings me to the third point that I'm going to mark off. Politics of Trump, trade war, and tough situation for farmers. It's kind of, I said this at the beginning, and I don't get into politics much here because only if it affects markets. But I think there's this sentiment that's kind of become trendy online of like, it's the farmers' fault they have bad soybean prices. And I just really wanted to do whatever you have to do. Turn off social media, turn off the news, turn it down. This is a really hard fall season, I think, for a lot of farmers. And I don't want you guys carrying any extra weight. We're going to jump into the analysis, but a lot of times there's just a lot of noise, and that noise can cloud our vision. It can change how we make decisions. It can, so the reason I bring it up is just, all of this noise and, this political stuff, whatever, I just turn down the volume on that because we want to keep a clear head, be safe in the field, get the harvest picked. We're going to make, the decisions that we need to make, but just turn down the volume on, the distractions. And I even toyed with bringing some clips of just kind of, social media frenzy and, China's never coming back to the market and, you might as well sell it. It's just going to get worse. You're not even going to have a place to put your beans and all of that stuff. And I chose not to share that stuff because I think we should try to turn it down. And I chose to mention this because I think it is doing a favor for your grain marketing. And we'll jump into the analysis in just a little bit. There's a reason that kind of that pyramid, the way we build that pyramid, the way we march through our decision making, there's a reason we do why we do. And a lot of it is to kind of separate the signal from the noise. So we're going to jump into that in just a minute. And then I just wanted to mention, I kind of did at the beginning, but there will be a question about overrun bushels at the end. So if you have doubts about that, I'll be addressing that at the end. All right, so those were the talking points that ran a little longer than usual, but there's kind of some important things to cover. The analysis part is actually gonna be fairly straightforward, which is almost surprising given all of the noise. But this for me is reassuring. Let me go ahead and share the screen. I'm gonna rush through this because there's a ton of noise, like the media noise, the social media noise, but check out just from like facts or like, if we didn't know there was a headline out there, would we recognize it? Let's get a marker. I'm gonna go with blue here. Okay. First thing I wanted to point out is the US dollar. Okay, that US dollar at these lower price levels, what this means, not talking politics, not topping you if it's good for the US or good for the economy or anything, but this makes our exports cheaper. It's just facts, right? If we have a weaker dollar, our exports are cheaper. So do with that what you will, but I'm going to march through this kind of analysis part, just kind of factual. We do have a weak dollar. That does make our exports cheaper. Fact number one. Number two, I'm going to kind of brush through it pretty quickly, but it's just the way we make decisions, right? The way that I suggest handling markets. Step number one, we have a market plan portfolio. So we think about how we want to move our bushels throughout the year. So we're not trying to guess markets to say, what should I sell? We're saying, okay, let's walk through our plan for how we need to move these bushels throughout the year from cash flow and logistics. Let's put these in buckets. And then based on each one of these buckets, let's handle them one at a time. When it's time, that doesn't mean we can't, if we have a great opportunity, that doesn't mean we won't forward sell or won't take advantage of it. But let's just break our marketing into bucket size pieces where we're like, okay, this is what we need to focus on now. This is what we need to focus on now. And let's make the best possible decisions at each one of those decision times. Then we're going to look at seasonals, funds, technicals. We're going to go through that real quick. That gives us our action plan. what I found is that this process for deciding on grain sales, if you followed any videos for any amount of time, you know I don't have a crystal ball, right? You know that I won't always get markets right, although we try our best, and I try my flat out best to say this is what's going to happen. Let's, step in confidence. No crystal ball. But when we follow this process, we can make consistently good decisions, and those consistently good decisions eventually pay dividends. And those dividends make a huge difference on your bottom line at the end of the year. This is the best way that I have found to market grain, is just following this pyramid, this simple process. So now let's kind of focus on that green part. Let's focus on that. Let me get a marker up here. That's the first thing we're going to focus on is the funds. Oh no, funds are selling. It's the end of the world, the sky is falling. Okay, but how many times has this happened? We've been going back and forth on this time and time again, right? Last week we were neutral. 2 weeks ago we were negative. And before that we had 2 weeks positive. Then before that we were negative for about a month. Then we were positive and negative. And, here there's a story maybe. And here there's a story. And here there's a story. Let's see if that works up. It's not cooperating with me. But this yo-yo stuff that we've seen on the position of the funds, I'm not, oh my, speculators are really selling soybeans. Right? Maybe this is the beginning of a heavy downtrend where they're going to sell speculatively and eventually, but I'm not convinced of it. So far, we're in this yo-yo stuff, a little long, a little short, a little long, a little short. I'm not convinced this is a trend by any means, not because of 1 week of bad trade right on the heels of Argentina's major declaration that they're going to undercut exports. That, for me, I would actually interpret that, wow, we had tremendously bearish news out of Argentina and the spec funds only sold a little bit. That's kind of my take on it, right? Super bearish news and just a little bit of soybean sales from speculators. That's not that bad, right? That's one way to look at it. And then the soybeans, if we look at the January from just a technical standpoint, you can be as optimistic or pessimistic as you want. You can draw whatever line you want. The bad news is this was the 200-day moving average, and we absolutely lost that support. So where's the next line of support? I'd probably say there's a decent shot we're going to come down here close to $10 again. That wouldn't surprise me very much. If we don't fall all the way on January beans, if we don't fall all the way to $10, then there might be a case made for some lines similar to that. And so maybe we fall another 5 or 10 cents and then we find some type of growing support, kind of an angle. But for me, the way that I'm thinking about it is like, okay, we're probably going to fall another 10, 20 cents on beans. That's very likely, very possible. So what if we're not interested in selling Q4 beans? It's not the end of the world. If for some reason these markets, like we were to get this January down here to 980 or even 990, I mean, just looking historically, if for some reason we'd fall that low, that's actually probably a buy. Because every time we've been that low, it's yo-yoed up back up pretty quickly. So on the soybeans, for me, it's just like, yeah, it's probably going to fall a little bit more. Big deal. Unless we're really looking to sell like in the next month, it's probably going to turn around. And again, like I said on my recommendations, my focus now is Q4. So we're saying, okay, what needs to be sold between now and the end of the year? Well, I'm not too excited if we lose another 10, 20 cents first week of October, a harvest, a low in October that challenges previous lows from August. That's not what's new. I mean, that's not a big deal. And if it were for some reason to just absolutely plummet, like I said, the sky is falling, that's probably a time where we say, okay, we start seeing some basis improvement. We've actually seen soybean basis in a lot of places kind of plateau. Some places it's still falling, but in a lot of them it's horrible. It's at harvest lows. It's not a good basis, but it's stopped falling, which again, spec funds didn't sell that much, basis didn't fall that much. Not trying to be overly optimistic, but You would think the situation is much bleaker from reading the headlines than what you do from just kind of digging into the spuns and texticals and seasonals. It's kind of a normal year from that standpoint. Same thing goes with the corn. We've seen kind of this gradual increase to the corn, and yeah, it took a little dip down here. It's a little bit worse, but it's not different than it was 3 and 4 weeks ago. How bad is it really? And I don't think we're not even at a point to say, hey, buy corn because the speculators have oversold. We're not even oversold yet. I don't mean any of this to be like super encouraging this is bullish, but if you would just focus in on kind of the official reports, you would say, man, it must be really, really bad all of a sudden this week. And what I'm trying to say, not that this is encouraging, but we've had this weight over markets for a long time. It's not necessarily worse now than it has been for really a long time. And if you look at corn, these are the August lows. The August lows are about 30 cents below kind of where I mentioned those optional buys 2 and 3 weeks ago. And even when I was talking about that, I said it might come back down here. Longer term, I think if your average buy-in is, say, between 410 and 490, if you get some type of average buy-in here, that probably is a value area that over the next 3 months, you'll be able to recover from. That would be my guess, right? That I would guess that whatever lows we're going to have in the corn market will probably be, say, 390 to 410. I'm looking at the December contract, and probably happen, either they already happened in August or we'll challenge them again here in October. Maybe it gets a lot worse than that, but what we've seen so far, I'm not really sure. It's kind of a normal, boring fall season from a pricing standpoint. And I actually mean that as kind of good news, right? So if you would just kind of look at the media outlets, man, this is really bad. And it is hard because farmers are having a hard time making ends meet. But just from it's bad, so it's going to forever be bad, that's where I think we need to be a little bit cautious about not getting overly influenced. We have bad prices at harvest. We have really bad prices at harvest. Okay, we usually have pretty bad prices at harvest. That's kind of the normal thing, right? The crop year lasts a long time. The question is, how can we kind of avoid biting the bullet on these bad prices at harvest? Maybe next year will be as hard as, this last year from soybeans never really rallying. Corn gave us a little action. But for me, it's just we're struggling with harvest lows at harvest. That's not necessarily new, especially in difficult bearish markets. Seasonally, it is a buy for corn and it is a buy for soybeans. Managed money is sold, but they're technically neutral. So they could sell more or they could unwind it. Soybeans are also sold, but they have neither one of those markets are oversold to where it justifies picking up a long position. This week, both corn and soybeans are in downtrends. If I had to guess, I wasn't copying that. I wasn't sharing the screen, but we just filled out the table here on that. And then on basis levels seem to be fairly comfortable near their harvest lows. While there still may be some downside pressure, I expect most of the basis pressure has already been accounted for. The corn and soybean markets are searching for their harvest lows. They may go back and challenge the lows from August. But if they don't trade that low, I will actually be fairly encouraged that we have the potential for strengthening markets in the near future. And that brings us to our question, which we'll wrap up the video with. Basically, if you have overrun bushels, right? So I've got bushels that are not forward priced and bushels that you don't have on farm storage for. Okay, they've not been sold. You can't store them in your bins. And I think because it's been a bumper crop, and also we didn't get a spring rally on corn, I think most farmers this year have overrun bushels. That's been something I've had a lot of questions about and even concerns. Will the grain facilities even take them? So for those overrun bushels, they weren't forward price. You can't put them on your farm. The question is kind of like going through the options. I could sell and buy calls. I could sell, so there's kind of 5 of them, right? Just sell and buy calls, sell and buy futures. You could, the fourth one was you could put it on a basis contract, or you could just pay custom storage. Those are basically, in a nutshell, those are your options. Exactly what is the best option for you kind of depends on a few things. Number one, if you need cash, paying custom storage to still have a cash problem doesn't make sense to me. If you need cash, either do the basis contract or some type of re-ownership. You can also just sell it, but I hate to sell what is very likely close to a harvest low. I would not be surprised if I think we very likely might be within 20 to 30 cents of the harvest low. And I hate to just sell that, but that is an option. You can just sell it. What I would not do if you need cash or on the bushels you need cash from is pay custom storage. That doesn't make very much sense because usually you can do a basis contract and they'll give you 50, 60, 70% of the cash of the face value. They'll give you that cash and then you don't have to pay the custom storage. You still have the futures open. Yes, you're locking in basis at what is probably the worst basis level or close to it, but you're getting the cash in a fairly, you're getting cash for it and you don't have to pay custom storage typically. So you're not really using the basis contract because you like the basis. You're using the basis contract because it allows you to keep your futures open and allows you to get some cash and allows you to not pay custom storage. It's kind of a backhanded reason to use the basis contract. In relation to re-ownership, what I would say is if you're trying to time the futures, then you could sell or you could just kind of follow, maybe next week's video, the conversation will be, hey, we're testing out these harvest lows back from August and it looks like it's holding. Hey, maybe this is a double bottom. I mean, that might be next week's video, right? Or maybe it's going to be, hey, it looks like we're turning a corner. This market is stronger than we thought and it's turning around. Or maybe it'll be, my goodness, we absolutely fell through the August lows. Hold your horses. We're in trouble. Let's let the dust settle and see how low this corn market can go. But kicking the can down the road, probably 1 more week, maybe 2 more weeks on actually taking a long or an additional long position, depending on what you did, if you already layered in. So before averaging into more corn longs or just waiting a week is probably prudent, right? That we will have more information, in my opinion, that will make sense instead of trying to catch a falling knife, let this market come down, and then if we're going to do something, we can reevaluate it next week. The calls for me are a little bit tricky because personally, I don't expect a runaway rally to the upside. I expect that any movement we get to the upside will be sold. So if you go spend 10 cents on a call, you won't make 100% of that move. And if that move isn't very good, it might be hard. I would only do calls if you're really concerned about the downside risk. If you're saying, I think this market's going to absolutely plummet, then I would focus on calls. If you're very, very nervous about the downside risk, then focus on calls, because it eliminates that. But I guess of the options that I think make quite a bit of sense, and this is more just pragmatically from helping farmers, I think two things that make quite a bit of sense on those overrun bushels are doing a combination of basis contract and paying custom storage till the end of the year. And the reason I would do a combination of that is because just if you work the math on it, the basis contract, the basis will more than likely improve between now and the end of the year. We usually get a basis pop. But there is a cost to being, holding that grain so you can get that basis pop. You're going to pay some custom storage. So the question is, will the improvement in basis be bigger than the cost to store it till the end of the year? And what I think makes the most sense on that is to say, I don't exactly know, but I might as well have both horses in the race. So I'll write the basis contract. That'll give me some cash now. I'll get some cash that I need. I'll write the basis contract, and I'm not paying storage on that. And then I have till the end of the year to price that. And then that, if in your portfolio, that basically just goes to Q4 bushels, right? Bushels that we're going to price between now and the end of the year. And then with another chunk, you just say, okay, I don't really need the cash on this. I do think basis will improve. I don't want to be committed to I'll just pay the custom rate here, and I don't really need the cash. I'll pay the custom rate, and we're just going to wait till the end of the year. And then in relation to using options or other tools, I don't think it's a horrible idea to just say, let's just keep Q4 bushels. If we get a rally, bad South American crop will handle that. And then if we need to do something more on reownership, make that like a secondary plan that we handle. Maybe we'll layer into that sometime over the next 3 months. But for the time being, let's say, hey, figure out how much cash you need from your corn or your soybeans, your overrun bushels. Figure up, can you write a basis contract on that and get some cash? And then that takes care of your cash, stops the bleeding on any storage costs, keeps your futures open, and that's one thing. And then take the balance and say, okay, I want to keep some basis exposure. I'll pay some custom rates on this. It's okay. Haul it in and pay the storage and handle it. That's what I would say. Kind of both of those strategies are, if it were me, for myself, those would probably be the two things I would focus on kind of those overrun bushels. And then both of those, the combination will be driven basically by your cash needs, how much you use of either one of those. But then the balance of that, whatever those bushels are, I would just add that into your in your portfolio. Just think of those as like Q4 bushels. These are bushels that we're going to sell in October, November, December, or we're going to, move them at that time and then maybe consider a reownership position. But I'll make the recommendations. Once they're in that Q4 bucket, we'll have those Q4 recommendations throughout the course of the next 3 months, right? So then you can just start following those Q4 recommendations on how to handle those bushels. So hope that's helpful. Be safe out there. Appreciate your good work. Stay zeroed in on what matters. The farm, the family, good work. And we'll make it through this. Enjoy the good crop. We don't have good prices to enjoy, but enjoy the good crop. We'll be in touch.